All right, guys, welcome to our August 19th edition of This Week in Crypto. I'm your host, Brian, here at Santiment. We'll be going over quite a bit today after a bloody 24 hours, if not full past week. It has not been a fun time after we went through a pretty good month and a half stretch of rebounding to make up for lost time in what was a very rough first half of 2022. So now here we are looking at prices, and we can see that a lot of market caps have shrunk. There were a few exceptions, Chili's, Uniced Leo, Celsius, Shiba Inu is still up a bit over the past week. But for the most part, every single one of these assets here in the top 100 have seen some decline going on, along with the stock markets, of course, and equities in general, and we'll go over that as well. But first, of course, I want to remind everyone this call and channel and everything we do at Santiment is not to be considered investment advice. What we do is try to find data divergences to help you with your trading, to make educated predictions on where prices will go next based on similar divergences and repeats and cycles in the markets that we've seen in the past, and be able to compare them to what's going on now. So hopefully that's clear, and feel free to chat in our YouTube stream or leave comments on Twitter, whatever you please, and we will try to get to all of them and address any questions you have about how we can react to what's going on right now and what assets we may want to dive into toward the second half of the call to analyze and see where some of your favorite coins are sitting at the moment. So with that said, as mentioned, big declines all over crypto this past week, especially in the past 24 hours. We're looking at the last 7 days right here in terms of percent changes, but I can also go to the 24-hour one, and you can see just how much a lot of these declines happened just since around 7 a.m. Pacific time yesterday and now. And we see just double-digit percentage drops all over the place. Even Bitcoin and Ethereum are down 9% in the past 24 hours. And in the past 7 days, they're down 10%. So 9 of the 10% that they lost was just in the past 24 hours. That's a ton. We can see, as far as some of the biggest drops, BitDAO had a huge decline. Curve, Thorchain, The Graph, Phantom, Maker, ApeCoin, we see here Chainlink really dropped off hard, Near Protocol, and Uniswap, just to name a few of those. Really, I mean, there's multiple ways of looking at it. If you're a big altcoin trader, you may say, well, the ones that drop the most may be presenting the biggest opportunities. Well, it's complicated, right? You can look at each coin's MVRV and see average trading returns, and that's a little more accurate than just simply looking at prices going up and prices going down. You can, of course, look at their actual raw utility. You can look at their whale activity. Every single coin has their own specific data sets, which might open the curtains as to what's going on for them. So you want to be careful not to fall in the trap of, just buying the dip on the biggest losers and selling profits on the biggest winners. There are so many facets that go into things, and we will try to get into as much as we can here. But just to conclude kind of the overview here that we always start with on our streams, social volume on over the past week has continued to not look like a lot of people are talking about crypto. And to me, that's kind of a good thing. Even during the month and a half of price rises, we were seeing mostly declining discussion rates going on social platforms, on Reddit, Twitter, Discord, Telegram, and the various platforms that we use to get our data scraping resources so that we can actually see how often discussion rates are happening. So with those declines, it means that a lot of the mainstream crowd and the FOMOers that were in 2020 and 2021, they've essentially been removed from the market. That's, of course, a generalization. Plenty of new people still come into crypto, even when prices decline. but it's a fraction compared to what it was in the 2020 and 2021 years. So with less people in, that means there's more people who are now patient hodlers and people in it for the long run who've been here a while and are used to the cycles. And unless you start to see that a huge discussion rate is going up for a lot of altcoins, whereas Bitcoin, Ethereum are being discussed less, which is sometimes true over this 2022 decline. Usually it's okay. You do see, BNB, Uni, Litecoin, a lot of these are actually getting increases in discussion over the past week. And that's only because altcoins were really, really starting to get a large chunk of the attention as prices were rebounding between late June and mid-August. So when they fell, everyone was, of course, asking, what's going on? My portfolio just dropped 30% because I'm in all altcoins, stuff like that. That's the kind of stuff that's going to make the discussion rate go up temporarily. But if we go to like the last 30 days, it's basically been that way for a while. We see Solana like still up 15%, Ethereum Classic up 16% in the past 30 days, Matic 132%. There's some pretty wild percentages up there right now. But Bitcoin, Ethereum being talked less and less and less. Tether, interestingly, is up. USDC is up. So some of the stable coins are still being talked about a lot. BUSD, 105%. That's pretty insane. So really, we want to see Bitcoin, Ethereum begin to be discussed more and altcoins be discussed less. And if you were watching this on the 30-day scale and it was looking like this for a while, you might be a little bit concerned. And just to jump ahead a little bit, I want to show social dominance right off the bat for Bitcoin because it's such an important metric when things are declining like they are right now. I think it's a little further down. Here we go. So check out this pink line here. I'll just remove social volume, the raw amount of discussion rates. So what we're looking at right now is the percentage of discussions of Bitcoin compared to the overall cryptosphere, every asset, particularly in the top 100. So we don't just scrape all the way to like 3,000 or so. We're really just looking at one particular asset, whatever you're looking at here for social dominance, and comparing that versus the top 100 assets in crypto. So typically with Bitcoin, we like to see a healthy discussion rate be around 20% or higher. So around an arbitrary number, of course, but historically through some back testing, we found that being up here usually leads to rising prices. When it starts to decline, that's when you start to see some topping and price declines. So what do you know? Right after this June decline here, social dominance started to go above 20%. And guess where the bottom was? Right as it went above, and it stayed growing while social dominance was well above 20%. Right here in late July, this was the first real red flag because altcoins were starting to be discussed very heavily. And because of that, the Bitcoin dominance went back down to 15-ish% or so, below our arbitrary number we like to look for of 20%. And we started to see a little bit of wobble. Things were able to continue to climb a tiny bit, but not at this rate by any means when dominance was up high. So with dominance going lower outside of, a temporary spot here, which not coincidentally was a bottom right in this tiny sliver of social dominance going up high. So prices rose right here. And then as soon as it fell back down, that's when we saw this top form, and it's been declining a bit ever since. So that's Bitcoin for you. And just to give you some perspective, it works for Ethereum a bit too. So going back down to social dominance, now under Ethereum. So Ethereum is, many argue it as an altcoin. Some say it's right up there next to Bitcoin as a primary asset that every other asset depends and relies upon to grow their own market caps. Uh, it's somewhere in between. You know, it definitely is true that it carries many other assets. Um, but in terms of needing to having a high Ethereum social dominance needing to be necessary for prices to grow, it's not really the same uh, in value as it is for Bitcoin. So for Ethereum, you know, anything like, you know, I would say 12.5%, 12%, that usually looks like a point in which Ethereum is being discussed a lot. And obviously, you know, this was actually July, excuse me. The Ethereum merge happened right around here. We saw a little bit of an uptick, but not compared to what we saw in July. And I'm actually not sure what caused this huge spike. But regardless, you can see that with Ethereum, it's kind of the opposite. And this is how most altcoins work. When they're getting less attention, like we saw here, prices move up. And when social dominance goes up, prices kind of move down, and it's a bit inverse. So it's a bit more muddy there. But Bitcoin is kind of on its own little island where you always, in my opinion at least, and some of you may have different analysis and I'd love to hear it. In my opinion, you always want to see higher social dominance for Bitcoin um, in order to justify that prices can grow. Because if social dominance is low, that means there's a lot more focus on meme coins and S coins and assets that maybe just aren't productive to the rest of the crypto sector organically growing over time. So that's how I see that. Now, going back to some of our main points here, we can take a look at how the sentiment is looking by simply comparing the terms buy or bought or buying in blue to sell or sold or selling in red. And when you see large spikes in buying without selling catching up, that's usually a bad sign. These would be examples here. In late July, we had a couple fairly big spikes while selling was very low. It was actually sort of going down. And we did have one big spike up, and then there was a big top, and it just declined huge after that. Another one here, big uptick in buy. Now sell was starting to get some traction here as well. So this was a little polarizing because this spike was a local top, but as soon as this big sell spike came in, and there's always a few more mentions of buy than sell. That's just the nature of crypto bias and people wanting to talk more about buying than selling. But when this one happened, this was actually a sell spike, so people were getting fearful and prices rose. It's not always going to be this clear, but more often than not, you can make good educated guesses by finding when sell spikes are going up and getting very close to even surpassing buying. Like here, there was a few big spikes in selling compared to buying, and prices soared. And then here, there was a huge spike in buying without selling following, and prices fell off a cliff. And that was the most recent one. This was back on the 16th, so Tuesday. Not saying for sure this was just the obvious signal that everything was going to drop off the face of the earth, but very clearly there was some serious FOMO going in just by this slight drop. Everyone was saying, all right, this is the dip for me to buy. I'm going to get in now that prices are a little cheaper, and they kind of got burned, right? There was very often what happens is the crowd might will the price up a little bit by their mainstream opinions, and then long term they get burned because whales, the people with millions of dollars in Bitcoin or any other asset, they're the ones who are going to control markets. And when they see a ton of FOMO, they're going to say, all right, it's time for me to profit take at a good price here that the mainstream is trying to push up at the moment. And then when everyone is fearful and saying crypto's dead, crypto's a scam, that's when they buy in because they're getting the cheapest prices because the weaker hands are all selling their backs. So I thought this was a really interesting chart, and you know, I'm going to check in on chat here really quick just to see if anyone might be saying anything about it, because this is something we're trying to do more. Okay, all good. Yeah, just a few comments about So I'm going to go back to this chart now. And this was an analysis we did about a year and a half ago, where we talked about how when coins claim a top 3 position on our social trends page, which is our top 10 trending keyword or asset list, that is when you typically see price tops. Roughly 12% decline happens over the next 2 weeks after a coin hits a top 3 position, assuming that the coin is in that top 3 position due to some form of a price rise. Because if it's not doing this and it's just being talked about for, a fundamental reason, then it's kind of an exception to the rule. But in the case of Ethereum, which really was getting a lot of headlines for at least late July and the first half of August, it was being talked about not just for the merge coming up in mid-September, but also because there was a point in which it had gone up a little over 70% in a 30-day window in early August or so. And when that happened, it started to pop up a lot on our trending page, especially, of course, when Buterin and the Ethereum devs really started to discuss the merge and the date in which that was going to happen, which is now known as the 15th and 16th of September. So for a variety of reasons, Ethereum was starting to trend. We can see right around here, this social dominance spike. This was the moment in which it was the merge date was discussed. And since that time, we had a top, we had a little bit of a push up and then a big decline down. And of course, this is related to Bitcoin and the overall correlation with the S&P, which we'll get to. But with these spikes here, more often than not, they correlate with price tops. And you can see even right here, the very big ones in early July. I think this was when the merge was really first starting to get talked about seriously, as though, I mean, people knew about the merge back here, but this was the moment in which everyone was really starting to say, all right, it's coming up, guys. And there were some serious talks about what it was going to do for the Ethereum ecosystem and all of that. And that's when prices topped out. And eventually, I want to make sure it's on Ethereum, not Bitcoin. I apologize. So same thing, it topped out here. We see this again was the merge where we had a little bit of a top out shortly after a slightly longer rise. Things fell off and we had this big spike down. And now we're seeing another social dominance spike right now. And that's interesting to see as well because it's happening on a decline, which might mean there's a little bit of solace coming up and at least a temporary reprieve to the dropping for Ethereum, which is now, or at least right before the call started, it had just dropped below 1,700. So we're going to have to see. I remember it was number 2 on the trending page, right behind the word merge, and that happened right around here on the 11th. And obviously that was due to the announcement of the merge being made, as well as this huge price soar that it saw pretty much since mid-July. So according to this backtest, it's playing out exactly as this predicts. You see it in the top 3 position. Sometimes it's not exact. In Ethereum's case, it hit a top 3 position here. The price continued to go up just a little bit more, and now it's starting to do this and going down. So one may say that the 12% or so has already played out because it did get above 20%, and now, at least right before the call, was below 1,700. Could have popped right back above. I haven't checked prices in the last 15 minutes or so, but that's just an example of what we want to look for when it comes to the mainstream hyping up a coin too much, even Ethereum. Bitcoin is probably the one exception where you want it to consistently have a lot of hype, but it hasn't had that in quite a while. So that's just an update on the peak hype and what's going on with Ethereum. Let's move over to the Bitcoin correlation to the S&P really quick, and then we'll get into some of the nitty-gritty usual indicators that we like to check out. All right. So we're looking at the last year. Let's zoom in just a little bit to 6 months. Okay. So in green here is Bitcoin's price, blue is the S&P 500, and gold is gold. Bitcoin has, of course, seen this drop just recently in the last week or so, down about 12%, I believe, 10 to 12%. The S&P, as we can see, has done far better and actually risen quite a bit, especially since they both bottomed out. So this was kind of the separation right around here on June 21st, where we had this big rise in the S&P, whereas Bitcoin kind of stayed a little more flat. And yes, they both grew, with Bitcoin getting up to 25K at one point, but the S&P made up for a whole lot of lost time since its big price top here in March, and Bitcoin hasn't come anywhere close to its top in late March. So I would be pretty confident that this is considered a break in the divergence after we've seen a very consistent divergence between the two since January, really. And yes, we're still seeing both decline at the same time, both rise a little bit at the same time, but the tight, percentage fluctuations between the two appear to be over, at least for now. And that actually long term can be a good thing for crypto because, as we have studied, the best times for bull runs to start is when there's just no correlation. You don't see a tight correlation like we were seeing here, and you also don't see an inverse correlation, which would be Bitcoin going up and the S&P going down, or vice versa. And because the correlation has kind of broken a little bit, there's more of an opportunity for Bitcoin and crypto market caps in general to start fluctuating on their own behalf without the S&P dictating where it goes next. So, whoops, I accidentally highlighted that. So that said, I mean, you can see gold is still off in its own little area as well. And one might even argue, at least for the past week, Bitcoin's probably followed gold a little more than the S&P, especially with this big decline going on at the same time as Bitcoin, where the S&P hasn't dropped nearly as much. So keep an eye on gold too, right? Especially with all the talk of recession and the FOMC having another meeting about a month from now, mid to late, I think it's around the 20th, 21st. Someone can correct me if I'm wrong on that, but that's when they're going to have their next meeting to discuss whether the US interest rates should rise again. And that has been a very major news topic that has dictated where crypto goes next. A lot of people don't think they should be related, but the reality is we're just not in a position yet in crypto to have large enough market caps to be immune from real world events and economy changes. So when the consumer index reports come out, it absolutely is still impacting what happens in crypto because a lot more institutional investors are in crypto now, and they have plenty of overlap between the sector here and the S&P and equities in general. So their decisions on what to do with their money are going to be similar to what they're doing with equities. And until we have, that Venn diagram of crypto traders and equity traders, and the middle portion is very large right now compared to what it was 5 years ago. If that middle portion starts to decline and be a little more independent, where crypto is here and equities are here, that's when you'll start to see things like FOMC reports not have as much of an impact on crypto. So that's just a little update on the economy side and how it's still impacting crypto. Why don't we take a look now at some of the main on-chain and social metrics going on for Bitcoin? So we can start here. Let me zoom. Actually, 3 months is fine. We'll keep it a little zoomed in for now. So we look at circulation going back to mid-May, and we were seeing around 223, 224,000 unique Bitcoin moving every single day on the network. It kind of stayed fairly flat. We had this decline here in mid-June, And even with rising prices, I can draw this divergence line here. We'll just do it up to there, right before the decline. We saw rising prices ever since mid-June, but the circulation, this is the 30-day average of that pink line, the circulation was going down. So we're seeing rising prices with declining circulation. That's not what we want to see. We want to see circulation going up and doing something like this when prices decline, and that would actually be a bullish divergence. But nevertheless, we've been dealing with less and less unique tokens moving as prices are rising, and that's a recipe for concern. Because with utility and increases in transactions happening right and left, and coins moving from wallet to wallet at a healthy rate, that's what makes prices rise. So with that decline and rising prices, we can look at our NVT model here and see that for the month of August, it's reflecting a bearish divergence, which makes a lot of sense based on the two lines we just drew. As prices have risen, not by a lot, but at least a little since the bottom in June, we've seen less and less tokens move. And right now, at least through almost the first 3 weeks of August, we would be on pace to have the first bearish divergence since September. And that's a big concern. Last month was already semi-bearish, and it wasn't clear whether it was just an anomaly or not, because it had come after a lot of semi-bullish and bullish divergences here as prices were declining and circulation wasn't looking quite so bad to justify the declines. Now all of a sudden we're seeing the reverse. Prices bounced a little, but we're not seeing nearly enough tokens circulating to justify even this small bounce. So this correction, at least according to this long-term model, makes sense and is justified. And hopefully, we start to see a little bit of dormant movement and people starting to react to what's going on right now, especially if it goes below 20K, which is a definite possibility. Then there could be a big uptick in circulation, kind of like what we saw after this drop right here in early to mid-June. And circulation soared because it created polarization in the space, and everyone was saying, now it's time for me to buy, now it's time for me to sell before I lose any more. Either way, you just want people to start reacting and moving their tokens instead of just being stagnant. So that's a little update on circulation. And then we have another very important utility metric that we like to look at, and that's daily active addresses. And what we look at here, I'll zoom it out a little more for this one. What we look at is the amount of unique addresses that are actually making at least one transaction every day. And as you would expect, just like circulation, the higher that number goes, the better for the price of any asset, because it's implying there is a greater amount of activity on the network. And with more addresses interacting, the reason it has some alpha is because it's usually predictive that the overall amount of transactions will go up because there are simply more participants overall. So you can see over the past year, the highest day we had was on the day of the all-time high, November 8th, 2021. And this happened for a variety of reasons. There were a lot of whales taking profit around late October, all the way up to the all-time high. And then things quickly declined. And you shouldn't look at one particular day for this one, because it's definitely a long-term indicator more than a short-term one. But when this red line is starting to peak out and decline like this, that's a concern for sure. And we saw the same thing happen here. I'll just take off the orange bars altogether. So the daily active addresses topped out here in mid-May, and they were really, really dropping hard as prices were declining. And this would have been a really good indication that things could improve right here on July 18th, even though prices were already starting to increase. Things were really starting to pick up here, and prices were able to rise. If I just hold down shift and highlight the low to the high from the past month for daily active addresses, prices went up a modest, well, let me make sure to not, okay, we'll call it 4.5% or so. But daily active addresses were up 5%, and that's pretty typical. They go up in tandem together. And right now we're starting to see a bit of a drop off again. But if daily active addresses, continue to stay somewhat near this trend line instead of start to look like this again, we should be okay. And I wouldn't be too worried about Bitcoin falling off of a cliff too much. But for now, it's a wait and see situation. And, hopefully we can start seeing daily active addresses close to 1 million again, like they were around the early part of November, instead of where they are now, where they were starting to drop below 900K again. So that's utility metrics. Let's move on to MVRV now. So MVRV for the 30-day period here in pink, it had jumped into positive range in mid-July and stayed that way up until mid-August. And then this big decline that's just happened has pushed the 30-day MVRV back down into negative territory, which is actually a good thing. If you are a bull, you would rather see the average trading returns in the red versus the green, because MVRV, no matter what the time frame, will fluctuate around 0%. So the further below 0% you are, that means there is less risk than usual to open a position right now or add on to your position due to the amount of pain that traders are already in. And with pain comes capitulation, and with capitulation becomes bounces and bottoms that you can take advantage of. The biggest bottom happened in mid-June, of course, where it infamously dropped, just from late March here until the bottom. Bitcoin had dropped about 59%, which is a huge, huge number, of course. And when that happened, the 30-day MVRV got down to as low as negative 22%. And you can see if I draw the danger zone line, which is right around negative 15%, these 4 instances, 1, 2, 3, and 4, usually came with a bounce, other than maybe this one where, it was a very temporary bounce and then it just continued declining. This one was a golden opportunity to buy in late January. This one at least halted the bleeding once it went below negative 15%. You actually could have had a little bit of opportunity to get some profit here. Then it fell one more time. Remember that these were related to FOMC, inflation, recession fears, mostly. And then the final one, as mentioned, it went down to negative 22, negative 23%. And that was the bottom where you could have rode up a pretty nice little wave and made at its peak around plus 29% for Bitcoin. So certainly no short amount of returns that could have been had there. So now that it's back below, this would be a better than average time to add to your positions. If we fall below negative 15% again, that would be a very, very good time because it's considered an opportunity zone. And then on the other end, we look at plus 15% as a danger zone that we want to stay away from. And that's actually only hit twice in the past year, with the last one happening in October. Nevertheless, it's gotten close quite a few times. Here in early February, here in late March, and here in mid to late July as well. There were plenty of moments where it was getting close to a danger zone, and we usually see price tops like we did here. That was a top. Here, that was a top. Here, this was a definite top because it went into the danger zone, and we haven't really seen one since. So it's staying kind of in the middle right now. Obviously, Bitcoin has been quote unquote boring compared to a lot of other assets out there. So if you look at some of the other assets, which we will later on this call, you'll see much more dramatic swings where it definitely goes into the danger zone and into the opportunity zone plenty of times. So that's 30-day. If I remove that though, and we look only at the 365-day MVRV, things actually look pretty decent. The negative 15 plus 15% windows no longer apply, and we're now looking at much larger fluctuations. And over the past year, the highest this 365-day MVRV has gotten to is about plus 53% back on October 20th, and got as low right around mid-June to negative 50%. Right now, it's at negative 38%, and just like any other MVRV time frame, it's going to fluctuate around 0%. It's still a zero-sum game, just like any other sector. So if we go back, let's say 7 years to 2015, we'll see that usually in the instances where MVRV gets up really high, that's where we see our tops. When it gets down really low, that's when we see our bottoms, vice versa up here. And then again down here, remember this one here in mid-June was the second lowest MVRV had ever gotten in the last 7 years. And when that happened, of course, there was a bottom that formed. And right now we're still quite low. Technically, if we look at where we are now at negative 37%, it's just a little bit pretty much right on where we were here in March, which was Black Thursday time, when prices declined and dropped below. Market caps universally dropped half or more during this moment when COVID first started hitting the mainstream. And we're at that exact same time right now. By no means does it mean that we're suddenly going to do this again. That would be nuts. But it does mean that we are in a better than average position still for a price rebound on the long-term scale. Just understand that this is more of a month-to-month measurement when we're looking at the year-long MVRV as opposed to, day-to-day as we are with the 30-day MVRV. So decent news, I'd say good news on the 30-day MVRV side and excellent news still on the 365-day MVRV side. So stay patient. You could see a lot of volatility. Absolutely, prices can drop below 20K, even below 18K again. But with patience, and especially if you see MVRV starting to get close to negative 50%, if it does get that low, understand that fundamentals are usually right. And with enough patience, you can be handsomely rewarded if you're buying in when long-term MVRVs are remaining in negative territory like they are now. All right, so that's a little on MVRV. A few other metrics to look at. I'll zoom back into the last 6 months. H consumed, not a lot special is happening. The dormant tokens are staying dormant for now. This isn't enough of a scare to really wake up the old and dormant addresses, at least for now. Supply and exchanges is actually looking quite good. The amount of Bitcoin on exchanges is continuing to decline and move off of exchanges into cold wallets. That's what we want to see, because the lower this number gets, the less risk we'll have of a future sell-off. So very good to see that. We don't want to see something like this. Like, this was really scary in early May. Prices were declining, and as they were, coins were flocking to exchanges so they could continue to be sold off. And when that happens, we can see further sell-offs, which is exactly what happened in June. But for now, we're not seeing, continued waves of supply moving back onto exchanges. Quite the opposite. We'll do whales in just a moment. I'll get through the rest of these metrics first. Exchange flow balance, nothing too special happening here. Network realized profit loss is pretty flat. Development activities looking fine. Social dominance, we already went over that. We want to look for something over 20%. It is not there now, so still a bit concerning, while a lot of the crowd focuses on altcoins. Weighted sentiment, we'll switch to 7 days really quick. So this is an important one for sure. Even as prices were rising, we saw that sentiment was mostly in negative territory for Bitcoin, whether it be due to just less people talking about it, or the people that were talking about it not believing the hype and this rise could continue. So yeah, negative sentiment for 1, 2, actually going all the way back here to May. We go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This would be the 13th week. Out of the past 16, the few that were in positive, this was barely positive, but 13 of the past 16 weeks, we saw more negative sentiment than positive for Bitcoin. And that's a good thing. As long as people are continuing to doubt Bitcoin and have a lot of FUD, in the long term, that's going to be a very good thing. Even going back all the way to 6 months, like out of these, give or take 26 weeks that we're looking here, only 6 of them have been more positive than usual. And the whole calculation for weighted sentiment is measuring how sentiment looks now versus the entire history of Bitcoin, where there's an even point and anything below it means compared to the average week, if it's in negative territory, that means there's more negative comments and or less overall commentary compared to the average. So it's with the notion that we believe that prices moved the least expected direction of crowd expectations. When you see continued negativity, eventually there's a big uptick. When you see continued positivity, there's eventually a big drop in prices. So overall, this is a better sign than average for sure. Ratio of on-chain transaction volume and profit to loss. I'll draw the 1.0 line right here. Anything above it means there's a little more profit taking than loss taking when each average transaction happens. And it's been fairly even, you know, like these are the big ones you want to watch out for. Back in March when there was a major amount of profit taking, almost 2-to-1 ratio. And that's exactly when that big price top hit. This one as well, this was a concern. It stayed flat for a few more weeks, but eventually dropped off. And then hopefully we can see the ratio stay low, kind of like this week has started out as. And that would be a sign that a lot of people, a lot of weak hands are dropping their Bitcoin at a loss and just getting rid of it. That's usually a good bottom signal. Whale transaction count. There are some interesting assets out there, but Bitcoin is not really one that's showing anything too special right now. We'll get to a few of those later on the call. Mean dollar invested age. This would be a sign that the average age of coins sitting in wallets is either moving up or moving down. Right now, it's continuing to move up because dormant addresses are staying dormant, and the average days is now up to 406, and it's been a long time since we've seen that number that high. We have to go back to about October 2020, the last time we saw the mean dollar invested age over 400 days. We want to see ideally dropping mean dollar invested age, which would mean that the average age is getting lower and lower and younger and younger. Of course, that happened very clearly during the big bull run in 2020 and the first half of 2021. But even during the rebound here in late 2021, we were already starting to see that the dormant coins were starting to become dormant once again. So as of now, nothing great to report there. It's continuing to look a little concerning because of the stagnation on the network. So that's it for the main Bitcoin assets or metrics, I should say. Let's take a look at whales as promised now. And we'll take a look at the two key ones, which are Tether and Bitcoin. We move this to USDT. And we'll get rid of that. Full screen. Actually, we'll make it just the last year. Full screen that. All right, so the gold line here would be Bitcoin's whales holding between 100 to 10,000 Bitcoin. Usually when this line goes up, so does the price. When the line starts to go down, prices generally follow. And there's some good alpha here. If you see a big dump, like right here, it usually means a couple days later or a week later, there's going to be some decline to go along with it. And at least for now, July 25th or so continues to be the bottom for Bitcoin whale holdings. They were holding about 46.01% at that time, and they're at least up 0.08% in terms of the amount of Bitcoin's supply that they've accumulated between July 25th and almost a month later. Meanwhile, Tether is looking pretty similar. It did get as low as 27.7% in terms of their shark and whale holders that hold between $100,000 to $10 million in Tether. And since that time, they have accumulated from 27.7% up to about 28.5%. So give or take 0.7, 0.8% uptick in the supply that are now being held by these large addresses. And when the buying power is increasing, that can have a good effect on the price of Bitcoin and all other crypto for that matter. So, when they're going up in tandem, as we saw here, prices generally go up as well. When there's a drop in one and a continued rise in another, that's when you'll see a little bit of flatness and indecisiveness in prices. If they're both going down together, yeah, that's when you want to be really worried, especially right here. Like, look at the huge drop in Tether just prior to the all-time high. And then what happened to the prices right after, because whales were holding less and less of both Bitcoin and Tether over time. So, right here, for example, in late January, we started to see Bitcoin continue to go down, but Tether going up. And it resulted in actually a little bit of reprieve because the buying power was increasing despite Bitcoin's holdings going down. And prices were able to actually move up. But eventually, with Bitcoin's supply continuing to go down, it caused prices to go down and Tether went down with it. You guys get the idea. But for now, it's looking okay still, right? Like, this is actually a decent sign that since the first week of August, both Bitcoin and Tether supply is higher than it was for these whales than it was in June, July. All right. So at this time, we are at about 47 past the hour. I think this could be a solid time to, well, let me do this. We'll put a few questions or assets you may want me to check out. And I'm going to do just a few more minutes of some sneak peeks at our Sansheets models to show you which assets are seeing a little bit of interesting divergences happening. So beginning with whale transactions, we want to look for the assets that are seeing huge percentages compared to their averages in terms of the amount of transactions happening by whales and $100,000 or more moves on their respective networks. So we can clearly see Dogecoin, and I know that Shiba was up there too. It's here. I'll show you on Twitter what we found out. We put this out yesterday. This is Dogecoin and Shiba over the past month, with Doge in red in the red line and the red bars, and Shiba in yellow with the yellow line and yellow bars. When you see huge spikes in bars, which are representing the amount of whale transactions over a given 8-hour time period, I just selected 8 hours for simplicity so there wouldn't be too many bars. You typically see local tops if prices were rising prior to that, and local bottoms if prices were dropping prior to that. And that's exactly what happened with both of these meme coins. Shiba had a bar right here on the 14th, and right at the tail end of that whale transaction spike, that was the local top. Boom, prices just fell off a cliff right after. Same with Dogecoin. We had two separate moments. This was basically a full day's worth of huge spikes in whale transactions. And what do you know, right in the middle of that, that was the local top, and prices have fallen off a cliff ever since. Now, yes, these are correlated with, Bitcoin and Ethereum prices for sure, but look at how they both distinctly had their own tops that correlated with their respective whale transactions 2 days apart. You know, this isn't all just coincidence because of the market fluctuations. This is specifically Shiba topping when there's a huge spike in whale transactions and Dogecoin topping when there's a huge spike in whale transactions. So I found this really interesting, and it's a very good example of why seeing these spikes can be so important. And Dogecoin is still seeing, as of these previous 4 hours, that's what all these bars are based on, a huge amount and some of the most whale transactions it's seen over the past 3 months, which is what these bars are based off of. And it's not just Doge by any means. This black line here shows that compared to the normal amount of whale transactions, which would show 50%, right now at this time, it's sitting at around 61%, so 11% above the average. So we can see a lot, you know, like AMP is way up there right now in whale transactions. Curve, we mentioned Dogecoin. Ethereum is still up there. Hex, Matic is having a huge whale transaction spike right now. Quant, XRP, I actually want to take a look at that really quick because XRP looks like it might be at its highest in the past 3 months right now. Here we go. So look at just the last month. Put this on. You can already see on the 1 hour, there's a lot of big spikes going on. We put it on 4 hours. I missed 4 hours. So this is where we're at. We're seeing a bunch of big spikes here, and this is just a partial bar. So what the model does is if you're at like 2 to 3 hours into the 4 hour bar, it'll make the projection for the remaining time by doing just a simple algorithm. And it's projecting that it's probably going to be way up here at around 210 to 212 or so, one of the highest, if not the highest, whale transaction spike that we've seen in the past 3 months. So it's going to be interesting, but we can already see, like, just by combining these 3-4 hour bars, it's probably the largest 12-hour span we've seen in the past 3 months. So XRP, after this drop, is seeing a huge amount of whale transactions. And historically, that's going to be a good sign because these spikes are happening in tandem with a big drop off, meaning there might be a little accumulation going on for XRP. You know, there are some assets that see a little more correlation than others in terms of, you know, right when that whale transaction spike happens, that's when there's a big turnaround. XRP looks like it's sometimes been accurate. If I go out to the last year, yeah, I mean, you can see very clearly, like, this spike here happened right when the price dropped. There was a big spike and then prices rose. Same thing here. Prices dropped, big whale transaction spike, and it at least smoothed out for a little while. This one was at a top, prices dropped off. At a top, prices dropped off. At a bottom, there was a temporary drop, bounce there, so on and so forth. You get the idea, but XRP looks to be like a big one right now with a lot of whale transactions. So that's a little update there. We talked about MVRV. As you would expect, when you see a huge price drop off, lots of opportunity zone candidates going on right now. Anything above this green dashed line, that means historically it's at a 5%. It's going to, of course, do a refresh right now, but historically there's a it's when it's in the 5% best spot in terms of, you know, multiple time frames, all showing that traders are in pain. That's when you see that they're crossing that opportunity zone, and usually there's at least a flattening period or a bounce when it gets to that opportunity zone for those respective assets. We'll let it refresh and maybe revisit it in a couple minutes, but usually when you see that, it means there's going to be a little bit of reprieve, especially when almost all of those assets we saw right before it refreshed were showing a green bar, meaning it's in an opportunity zone. And then finally, I wanted to show funding rates here. There was a big drop off and a lot of people beginning to short about 7 to 8 hours ago. And that's interesting to see. prices have continued to decline even during those shorts, and things have evened out a little bit. Bitcoin is looking fairly neutral, but still a lot of shorts happening for altcoins at the moment. And that means that there could be some short liquidations if there's a little bit of a bounce later today or this weekend before funding rates start to equalize up again. And while things are short and prices go up, all of these shorts can act as essentially rocket fuel for prices to go up quicker and more emphatically than they would otherwise. So this could be a very good sign as long as we continue to see shorting happening on the networks. All right, and that's just an update on 4 of our main Sansheets models. At this time, we can take our last 20 minutes or so to look at some of your favorite altcoins you'd like to do some further analysis on. Just to read a few comments, Koalaman says, unless people are trading against Bitcoin, presumably when money goes out of Bitcoin, it will go into stable coins. Yeah, I would agree with that. For sure. Bitcoin MVRV, we did that, no worries. Oh, I see, he's asking for 30-day divided by 90. So that would be a special custom metric we've done. Here we go. Go back to Bitcoin. So this red line here, I'll take off. Well, actually, the average MVRV is interesting too. This is basically taking the same thing that this divergence model is doing and blending all of the MVRVs together to show when things are getting extra low or extra high. The further down the pink line is, the more likely there's going to be a bounce. The further up, the more likely there's going to be a retracement. And right now it's continuing to be in negative territory, definitely in one of the better spots we've seen over the past year. So that's good to see. Now removing that, the 30-day MVRV divided by the 90-day MVRV is a way of looking at whether the short-term traders are catching up to the longer-term traders. And right now, the answer is they have, and it's back in neutral territory after being in very negative territory here. This would have been the perfect time to really get in according to this metric. And very quickly during this modest rise here that Bitcoin saw, it's put the 30 divided by 90-day MVRV metric back into neutral. So it's not really divergent in either direction right now, but it's at least good to see that pink line we just showed still significantly in negative territory. What else do we have? Let's see. Love you too, Austin. Thanks for the kind words. Hervé asks if we know what caused this huge dump in the past hours. I think it had to do with the US stock markets opening very red. I know that the S&P is down at least over a percentage point today. And with crypto continuing to be correlated with the stock markets and equities throughout the world, it's rare to see that crypto doesn't go down if equities are also going down. This bearish activity isn't ideal because September is usually bearish anyway. Yeah, I mean, it's tough. We're talking about roughly 12, 14 years at most when it comes to analyzing monthly data. And we've done back tests and models on this before, Koala Man, in terms of what months are best and worst for crypto. And when you're talking about only 12 different Julys, 12 different Augusts, 12 different Septembers, one major upswing one month can have such a dramatic impact on that month's average. And September, October, November all have really high averages, mostly because like 2016 and 17, there were just incredible surges during those 2 years. And it can be a little bit skewed. I think that it's more of a self-fulfilling prophecy where if enough people believe that September is the month where everything goes up, it can actually be negative. You don't want the entire crypto sphere to believe in something like that, because it will end up causing the opposite to come true, and whales will capitalize on a bunch of small traders all suddenly trying to accumulate at once just because it's September. So it's a little bit of dangerous thinking there. I wouldn't say you're wrong about some months being a little more bullish than others because of tax purposes, or paychecks or bonuses coming in where people have more expendable income during certain times of the year. But I would take that with a grain of salt, and I think it's a little bit, having that perspective can be a bit overstated. No worries, Justin. Thank you. 7-day SOPR. I'm not sure. I don't know if we have that data, Pablo. But ask us in Discord. We might have our devs give you more information on the SOPR. Why don't we get a few assets in, though? Did anyone mention any specific assets they wanted to take a look at? I see Flow mentioned. Not really. We'll take a look at Flow, and then maybe I'll just open up another. Yeah, we could do stablecoins. Why don't we start with Flow, and then we could maybe do a quick check-in on Tether and USDC. So gotcha, thank you. So Flow is not an ERC20, so our data is going to be kind of limited on it, but we do have some social metrics we can check out really quick. Development activity is also very important. Flow is one of those assets that does have a very strong development team and sees over 100 GitHub submissions per day, most days. And that's great to see. Over time, if we go back to 5 years ago, well, it's a very recent coin. We'll just do the last 2 years. So over time, this is exactly what you want to see in an asset, even though the prices are, of course, not where we want them to be. If you're a flow bull, development activity is looking something like this over time. And with a growing amount of development and innovation and ways for flow to become part of the mainstream in terms of crypto and its real life use, that's a very good sign. And it means at the very minimum, the people working on flow are big believers in its future in the crypto sphere. So it's always nice to see when a coding team is increasing their submission rate over time. In terms of social dominance and volume, not too much to say. We've seen the occasional spikes that are usually around local tops. This one wasn't one of them, though, because there hasn't really been a rise that has been distinguished from the rest of the crypto markets. Volume is going down again now after getting a lot of hype in late April, early May. So I'm not really seeing anything of significance here. Flow is basically just cycling in terms of its discussion rate over time. And I wish I had more information I could give on that. And then weighted sentiment is looking pretty neutral as well. You want to avoid the big spikes like right here and here. And even here, these are the times where you've clearly seen local tops and then prices go down as the flow starts to hit mainstream interest. So right now there is not mainstream interest, and that means flow is safe and could potentially rise without a ton of resistance and FOMO that could quickly squash any bull rally. That's about it on flow. Why don't we quickly move over? I said I'll check out stablecoins first, and then we could probably close with Link, and I heard one other asset. So in terms of Tether's circulation, yeah, this is scary because we're looking at the last 2 years, and over time, the amount of Tether that has circulated has dropped down to December 2020 levels. It's down to about 829 million unique tether moving per day, when it was at a peak back in June of 2021 of 2.54 billion. So that's quite a drop off, to say the least. Daily active addresses not looking much better, still very low here compared to where things were in the early parts of 2021. Age consumed, nothing special. Supply and exchanges, this is actually a good sign. So the amount of tether that was on exchanges at its bottom back around the all-time high in October, November of 2021 was way down at 11.8%, and it's risen up to 41% now, which is the highest it's been in, looks like, yeah, about a little over 2 years. So that's great to see, because this implies more buying power. For a lot of assets, if it's not a stable coin, this would be a concern. But if it is a stable coin, that means it's more buying power on the exchanges to scoop up more crypto when people are ready to make that pounce. We already touched on Tether's whales. Exchange flow balance, nothing too special. We did mention there's been a lot of inflows. That's what these spikes are showing. Network realized profit loss, nothing special. Development activity, not really relevant for Tether. Dominance and volume, also not really relevant unless it's due to major fear of, Tether becoming insolvent or something. But those fears have cooled off since the, April, May, and June months, where everyone was talking about Terra Luna and its stablecoin, and Tether depegged down to 95 cents for a week or two. Weighted sentiment, it is looking like there's a little negativity toward Tether right now, but that's something that often just correlates with bear markets, so I wouldn't be too worried there. Whale transaction count has been declining pretty swiftly. A little bit of a concern, I'd say, but nothing too special. And dormant Tether, not really any serious movement over the past month or so. So that's Tether. We'll quickly jump over to Chainlink now. Checking in on comments really quick. Don't think we'll have time for Wild today. I also don't think it's an ERC20. I'm just curious. I'm not too familiar with Wild, and I'm not 100% sure on what our metric limitations are. I take it back. So Wild is an ERC20. Let's see if there's some quick time for it. But first, we'll stay in order and go with Chainlink. All right, Chainlink this is pretty skewed. So let me move into the last 3 months only. Get rid of that big spike. Yeah, nothing special on the circulation end for Chainlink right now. It's staying pretty dormant. Daily active addresses is continuing to decline, so that's not great to see. MVRV, so the 30-day Chainlink MVRV is down to -5%, which is the lowest it's been since mid-June, give or take a 2-month low there. That's a good sign, because when the MVRV was at -5% or so back in July, I should say, not June, the price bounced pretty significantly over the next 2 months or so. That said, we like to look at something more like -15% as a true opportunity zone. It doesn't always get there, of course, but we're not quite there yet, getting below this line. You can see when it does get below these lines, that's when the big bounces tend to happen. But on the other hand, the 365-day MVRV, get rid of this line, it is after actually going above 0%, it's dropped down to -12% now, which means that it's still less risky than average on the long-term timescale to get back into Chainlink. So that's good to see. Age consumed, nothing special. The big spike happened here right around the bottom, so that would have been a very good bottom indicator back here in late June. Supply on exchanges is starting to move back down. That's good to see as well. It's down to about 17.9% after spiking up to 19.1 2 months ago. Let's take a look at whales, see if anything's happening there. Chainlink is currently priced at about $7. So we're going to say these three tiers are the ones to take a look at. The 10K to 100K Chainlink addresses have been accumulating aggressively since the very beginning of April. Same with the 100K to 1 million tier, and the 1 million to 10 million tier is also up pretty significantly since mid-April. So that's a very good sign. It looks like Chainlink whales are definitely getting richer. And when you look at these three tiers all combined together, so they were holding, looking at the past year, at a low about 29.3%, and collectively they're up to about 37.1%. So give or take, they've added 8% of the supply since February, the last 6 months or so. Very good sign, and it means that the top holders in Chainlink are continuing to hold strong and wait for things to turn their way again. Exchange flow balance, not too much special there. Network realized profit loss, pretty normal. Development activity, up and down. This is a very highly developed asset, and we see plenty of activity. It actually was recently in the top 10. If we go over here to our screener, and we sort by development activity, give or take 10 to 20 seconds or so sometimes to sort everything, and it's going to show that Chainlink is no longer in the top 10, but it should be, yep. So now it's here at number 13. Just about 5 days ago on the 30-day average, it was in the top 10. So right now, speaking of flow, by the way, it's number 10 on the top developed assets. But we go flow, IOTA, Internet Computer, Decentraland, Cosmos, Status, Ethereum here at number 4. Kusama and Polkadot are always identical because they share the same GitHub repository, and Cardano is just above it at 421 development activity submissions per day, as it remains at number 1. It's been there for quite some time, so if Polkadot and Kusama actually surpass it, that'll be an interesting story for us to look through. All right, so we looked at Chainlink. Let's take a look at one more. What was it started with a W. Now I'm blanking on what it was. Thank you. All right, so Wild's circulation is looking fairly flat, not too much to say there. Daily active addresses, same thing. It's been kind of at that 100 to 200 territory for most of the year. It dropped as low as 41 a little bit in June, but it started to pick up steam. And it looks like the average daily active addresses is sitting at about 103 right now. So, I mean, we'd really want to look for a breakout if it starts to cross 130-ish or so, as it did during its big run-up in October through late November of 2021. Let's take a look at MVRV really quick. We can't look at intraday for Wild, but we can look at regular MVRVs. So the 30-day MVRV, this is only about a 1-year-old coin, but the 30-day, if we look at this as the negative 15% mark, full screen, that would probably be a good idea. There we go. So other than this, let's get rid of that huge spike there. We can see that, man, these lines are just going crazy. Well, ignore all these lines up here, sorry guys. But this line here is the danger zone, and this right here is the opportunity zone. We're clearly below the opportunity zone right now, which is a good sign. On the 30-day scale, the average trader is about down negative 29%. And that's a good sign because we do see, man, it's tough because this coin is so fresh still. We do see that typically with an altcoin, when it goes below negative 15%, it's much more likely to see a bounce in the near future. But because Wild's only been around a year, this can easily be skewed. In a vacuum, though, assuming Wild has some sustainability, and I know very little about it, it could very well mean that there could be a big bounce coming up. I'm very curious to see, though, what development activity looks like. We don't have it. It could be on GitLab. It could just be not connected to our repository yet. But without that information, I can't confidently say whether that 30-day MVRV is significant or not. It is very low right now, obviously, but average traders on the 30-day scale, it's tough to really gauge when the coin's trading has only been happening for a year. H consumed, we have seen some dormant movement just the past week or so. These are pretty high spikes, the largest since December of last year. So that's worth keeping an eye on. I'm curious how that looks with mean dollar invested age. Yeah, not much happening. Most of the dormant coins are continuing to sit in dormant addresses. Let's take a look at whales to see if there's anything there. By the way, sentiment is looking pretty neutral, and volume and dominance are looking pretty neutral right now. All right, so Wild is priced right now at about 28 cents. So we're going to look at 100,000. Get rid of the merging. Just look at them individually for a moment. We'll look at 100K to 1 million and 1 million to 10 million. And this is interesting. It does look like since late July, there has been some pretty big accumulation, especially on the 1 to 10 million coin end. These coins combined right now hold about 10.5% of Wild supply, so not a ton there. But the red line, 100K to 1 million, it's been accumulating aggressively. They were at 2% here and are all the way up to 3.5% now since March. But the yellow line's kind of been going the opposite direction. So in this case, it's best, since they're a little bit inverse, it's best to combine them to see what they're doing together. And this is quite telling. So we saw a dump back here in early January, and then an accumulation right after the big drop in Wild's price. They eventually got rewarded and they started dumping again. There was an accumulation here and they got rewarded again with a little bit of a spike and then started dumping on that spike. Huge dump way down here, and it stayed down all the way until late July, about 3 to 4 weeks ago. And now there's been a big accumulation again, going all the way from 6.7% to 10.4% of supply held from these two tiers. And I find that quite interesting because these two tiers do seem to hold a little bit of weight on where prices go next. I mean, I didn't even touch on this one back in late November. Big accumulation spike here, and look at what the prices did right after that. So the price went up here. After just a little drop, that's when the whales really heavily got in, and they pushed the price up to the Wild's all-time high, a little above $7. And that really was some good alpha if you are tracking the whales here. And now they've been accumulating, like I said, for the past 3 to 4 weeks. Prices haven't really reacted yet, but it could be something there. Like I said, everything has to be taken with a grain of salt when the coin hasn't even been around a full year yet. But yeah, in a vacuum, I'd say this big uptick in whale activity is an interesting sign that we should keep an eye on. I'm curious if that correlates with whale transactions at all. No, not really. So these are tracking the $100,000 or more transactions, and they've just been getting more and more sparse over time. So yeah, whoever requested Wild, thanks for the request. This is the first time I've ever looked at that asset on Santiment, and it showed some interesting data for sure. I think we've gone over enough requests for today. I hope you all enjoyed the stream. And, as always, I want to thank everyone for the participation and coming in to join us today. Please tell your friends about it, whether you're watching on YouTube or Twitter right now. I can see we've got a little over 20 people in the YouTube channel right now. It's probably a little higher on Twitter, but regardless, continue to spread the word. Subscribe on our YouTube, follow us on Twitter. You can generate a referral link by going to Sandbase and simply generating a ref link for yourself, and anything you share on Santiment, it will credit you with 25 to 35% of the users sign up if they do sign up. So keep that in mind. I wish you all well. Stay warm and safe during the second half of this summer, and we'll be talking to you next week. Right now, I think it's going to be this upcoming Wednesday, when we're going to be doing a Twitter Spaces. So stay tuned for that, and we'll give you more information on there soon. So for now, guys, take care, and we will talk to you Wednesday.